Hello and welcome to Quilter Cheviot's Markets Uncut podcast, your weekly insight into the topics and issues that we have been discussing here at Quilter Cheviot. I'm Oli Creasey, Equity Research Analyst based out of London, and delighted as always to be joined by regular commentator and also head of fixed interest research, Richard Carter. And we also have along with us Equity Research Analyst Maurizio Carulli, who covers energy, mining, a few other things like that. So good morning to you both. Richard, I will always come to you first. I'll throw you the easy question first. I did suggest briefly to our producer that we just talked about football this week, but she very quickly cut that off at the start. So instead, let's talk about UK inflation numbers. A slightly higher print last week, I thought, 3.5%. I guess maybe it's a good thing that we're talking about low single-digit numbers and the difference between 2 and 3%, but still a slightly elevated number. What should we read into that data point?
Happy to talk about football, obviously, as a fellow Spurs fan. But no, on the inflation front, the numbers were a bit disappointing. I mean, lots of things get reset in April in the UK. Whether it's mobile phone charges, airfares, water bills, energy bills, all the rest of it. These things were expected to be going up pretty sharply. So the number was always going to be bad, but it turned out to be quite a bit worse than expected. The hope is, I guess, the Bank of England will be hoping that, it's a bit of a kitchen sinking in April, all the price rises are sort of out of the way and things will kind of calm down a little bit from here. But no doubt, the numbers have reduced the likelihood of interest rates being cut anytime soon. I mean, the sort of 3.5, 3.6, that sort of area, we're probably going to have that for the next 2 to 3 months. But then the hope is that as the year goes on, inflation will gradually drift back closer to target, and that will allow the Bank of England to be cutting interest rates. So, it's not completely the end of the world. It's not completely unexpected. But as I say, it has pushed back the likelihood of interest rate cuts for the time being.
All right, thank you. Well, maybe we'll come back in the summer and have a look at it again. Inevitably, another, for me, exhausting week looking at the impact of various Donald Trump pronouncements. Maybe we should talk first about the bill that is sort of wending its way through the Senate and Congress, the tax bill, the so-called, am I getting this right? The big, beautiful bill, which is quite a bold, punchy name for such a piece of legislation. Could you just give the listener a bit of a refresh, perhaps, what the bill means, it sounds like it's on a bit of a knife edge in terms of whether it makes its way all the way or not, and what the likelihood of it doing so and the impacts of its success or failure, perhaps.
Yeah, the big beautiful bill, otherwise known as the Triple B bill, which is where potentially the credit rating in the US is heading. That might be an outcome. Yeah, because I mean, obviously the backdrop to this last week, sort of Moody's downgrading the US from AAA, and it's almost fiscal stuff has replaced tariffs as like the sort of chief concern at the moment, arguably for markets. So a lot of what's going on in the bill is extending various sort of Trump tax cuts, and there's a lot of other tax cuts in there, and sort of changes to spending and all sorts of different things. Getting these bills through Congress takes a long time. And the Republicans don't have a huge majority either in the House of Representatives or the Senate. So it is tricky. The Speaker of the House, Mike Johnson, has kind of got to balance the kind of fiscal hawks who do worry about the size of the deficit, but also other people in his party who want more, tax breaks and all the rest of it. So it is a difficult situation. It's passed the House of Representatives by one vote only. It now goes to the Senate. They will have a look at it, make some changes, and again there'll be a bit of a bun fight in the Senate over what the bill should be like, and then it will need to go back later to the House of Representatives. So there's still a long way to go. It is important. Obviously, if you didn't do the tax cuts, that would be bad news for the economy. But I think markets expect those to go through. The bigger concern is, is the US serious about getting the deficit under control? We've heard all these things about government's efficiencies and Doge and tariff revenue and all the rest of it, but I'm afraid if this bill goes through, it does nothing to change the path of the US government debt, which I'm afraid is on very much an unsustainable path.
Well, thank you. That's a very clear, if not entirely optimistic outlook there. I just wanted to quickly remark and maybe get your remarks on the latest tariff headlines. I note that there's a bit of a will they won't they between the EU and the US with regards to these tariffs. Every time I've sort of written my notes up, they've quite quickly become out of date for this podcast, I'm afraid. But I'm also curious if you've got any insight at all as to what Donald Trump has against Apple and the iPhone in particular, because it seems that the Chinese manufacturing of the iPhone really seems to be in his crosshairs at the moment. Just curious if you've got anything to add on that at all.
Well, I mean, Donald Trump, as we saw also with the thing on the EU, it's every time he picks up his phone in the morning, it's potentially quite dangerous for markets. I'm not quite sure why the iPhone has particularly attracted his ire, but obviously a lot of it is made in places like India and China, and maybe some of the other companies have been saying, right, we're going to switch production to the US. We're going to do some sort of headline-grabbing factory opening that Trump can then go and, say, "Oh, how amazing! This is all working. This is great for the US," and that Apple aren't necessarily playing ball on that. But whether Apple are really keen to start moving production to the US of iPhones would seem to be massively in doubt, given what that would mean for the cost to the consumer and the popularity of the product. So I would imagine there'll be some sort of middle ground found between Trump and Apple.
Fingers crossed, hey. I had a quick look through what's coming up this week. A few bank holidays around the world, so and also our half term, probably a few others as well. So hopefully not too many big pronouncements, although that's probably a dangerous thing to say on a Tuesday morning. I did notice a few US announcements, some GDP growth numbers, which the consensus forecast is not especially strong. I don't know if you've picked up on that and whether I'm surprised by them because I'm not so close to them. Any thoughts there?
Well, their revisions, the ones coming out this week, we've already had the initial estimate, but growth in the first quarter, in the US wasn't particularly strong, unfortunately. Although a lot of that was sort of front loading of imports that drove that. So actually, underlying numbers weren't too bad. But yeah, there is more. It is a bit of a quiet week this week. There is some US data out, those GDP revisions, consumer confidence, things like that. But I think the main focus will still be on whatever Trump says or does on the tariff front. As I say, we've got this bill going through Congress, and then as we go into June, the central bank meetings get going again. So ECB, Bank of England, and the Fed. So yeah, it could be fairly quiet this week, but after that, things will get going again.
Brilliant. Thank you, Richard. Maurizio, I'll turn to you now. Welcome back to the podcast.
Thank you.
Great to have you on board. I just wanted to start. I'll start with hopefully an easy question for someone of your talents and experience. I saw the headlines that OPEC is considering a further oil production increase. I have to say, I don't track the oil price closely, and I was surprised to pull up a chart this morning that showed that actually, the oil price has been on a steady decline for a few years now. Even in the context of higher inflation elsewhere. But here we are again talking about further production increase, and presumably that means further declines in the prices are on the cards. Is that a fair assessment?
Yes or no? In the sense, in recent years, OPEC Plus made cuts to its production to keep oil prices sustained. And until recently, they were at around $17 per barrel. Since April, it is now progressively reversing those cuts, which were always intended to be temporary. And so in April, it was announced a 4,000 barrels per day increase. Then in May, another one. Next Sunday, on the 1st of June, OPEC Plus will take a new decision. It is possible or likely, as some experts expect, that an additional 400,000 barrels per day of increase will be announced. The reason underlying that is difficult to be ascertained, but certainly two reasons are there. One, Saudi Arabia appears to be willing to punish those OPEC producers that haven't stick to the production goals, like Kazakhstan. And secondly, it is likely that they want to try to regain some market share. Now, in terms of where oil price is going, now oil price is driven by the balance between demand and supply, like every other commodity. But there is an additional factor, the geopolitical factors. So, going forward in the second half of 2025, oil price is likely to be influenced by opposing forces. On one side, weaker weaker oil demand due to softer global economy, combined with possible additional OPEC production increases, would point to an oil surplus in H2 2025, and therefore to a weakening of the oil price. But on the other side, if Trump introduces more sanctions against Russia and Iran, or if the economic growth surprise on the upside, oil price might actually continue to remain at current level, i.e. about $65 per barrel, or may even rise further, albeit just temporarily.
Great. Thank you very much for all of that. So I just wanted to move across sectors a little bit, talk quickly about Johnson Matthey, who I think hit some headlines this week, selling their Catalyst Technologies business, and a very strong share price reaction to that. I guess that was a surprise to the market, and a good one at that.
It was indeed, because in recent years, Johnson Matthey share price underperformed on the basis of operational issues as well as strategic issues. And they announced the sale of the Catalyst Technology segment, which was a bit the crown or the jewel in the crown of Johnson Matthey organization. Definitely came across as a surprise, and in a way it is a testament of the management efforts over the years to try to refocus the strategy of the company. It is also possible that the pressure created by US active investors, which entered into the capital of Johnson Matthey with an about 11% stake, may have had some influence, but we will never know. The sale is expected to be completed by the end of the first half of next year, and the majority of the proceeds will be returned to the shareholders with an equal combination of dividends and share buybacks. So the sale has been definitely a clear positive for the company, and following the announcement, the share price increased by 30% on the day. So quite significant move. Albeit one has to remember that the share price was a fraction of what we were used to be a few years ago.
Thank you. And very quickly, maybe we just touch on the demerger of Anglo Platinum from Anglo American and a bit of share consolidation there. I think that was perhaps better understood by the market already. So perhaps not quite such a seismic share price reaction, but perhaps something of interest to yourself and the listener as well.
Yes, indeed. And as you very correctly said, the plan to the merger Anglo Platinum from Anglo American was well flagged already for many months, and it follows the strategic refocusing of the company following the rejection of a bid from BHP past year. I think the merger is clearly which is going to happen this weekend, is clearly a success for the Anglo-American refocusing, which will be concentrated after that transaction mainly on two commodities, copper and iron ore, both of which are very important both for the economy in general, but also for everything involved in the energy transition. It is not it represents the merger about 14% of Anglo-American current market cap, so it is not huge, but certainly it is significant. The company Anglo Platinum will be continue to be listed in Johannesburg, but a new secondary listing will be created here in London as well from next week.
Brilliant. Thank you for that. I will just finish on a slightly more light-hearted question. I'll turn to Richard first. We all know you're a Tottenham Hotspur fan. Are you going to be happy to see Chelsea lift the Europa Conference Cup, I think tomorrow, from time of recording?
Yes, I'd be delighted. Another London team winning a trophy. I wouldn't have a great problem with that. But I hope. I went to the Spurs game on Sunday. At some point, we'll need to stop bleating on about winning and actually move on to next season. Hopefully, we'll do even better.
There you go. And similar question, Maurizio. Careful listener might have picked up on your Italian identity. Does that make you an Inter Milan fan?
Probably yes, I'm afraid.
Very good. Well, let's look forward to a couple more big matches and then the close of the season, and we can get back to talking about finance. Little less tribalism, perhaps the world would just be a slightly better place. Huh? So I will just wrap up now and thank both Richard and Maurizio for those insights. Always really welcome and much appreciated. And of course, the usual here before we do finish up today. If the listeners have any questions, then please do reach out and ask. We would love to sort of feature them in any future podcasts that we do, and we already do that. So please do reach out. You can submit those questions on our weekly comments page, or indeed elsewhere through social media. And speaking of social media, of course, do make sure that you are, of course, following us. We've got Facebook, Instagram, or Twitter, LinkedIn, all of the usual. So please do look us up on that. And of course, finally, we have our website, www.quotachieveit.com. You can see more of what we're doing at Quotachieveit, as well as checking in on our past webinars available on demand. And also, of course, subscribe to the weekly comment newsletter if you are not already. That is all from me. Thank you once again for joining us, Richard and Maurizio, and thank you to you, as always, for listening.